accountant, you need to interpret and analyze, okay, the financial statements. So, the financial statements in the business, we have users. What are the two types of users of financial statement? We have internal and external users. So, if you are the internal users of financial statements, who are you? Okay, who are these people? The manager, the board of directors, shareholders, okay, the employees, you understand? The CEO, UFO. No, the joke. Of course, you have what is UFO? Identified flying object. Of course not. Okay, not UFO. Only the CEO, CFO, but never the UFO. Now, how about the external users of financial statements? Who are these people? Shareholders, government, customers, bank. Who else? Okay, now, sometimes these people, they don't know accounting, right? Do you expect your parents know about accounting? Okay? So they don't know. So this is the reason why we need to study, because we interpret. So when we look at our records, when we look at our analysis, wow, they can easily understand the financial statements. Okay? So now let's start. So could you please read? Okay, could you please read? Read the objectives.
After you have studied this chapter, you should be able to explain how the use of ratios can help in analyzing profitability, liquidity, efficiency, and capital structure of businesses. Calculated the main accounting ratios and interpreted the results of calculating accounting ratios. Okay.
Are there any words here that you can understand? For example, ratio. You know what is ratio?
Yes.
What is ratio? Huh? It is the relationship of what? Of the above and the below. What is that above? What is that above? What is the numerator and the denominator, right? Do you know that word? The above is called the numerator and the below is called the denominator. Okay, it's a relationship. And then how do you write the ratio? Like dot, okay? Two dots. Okay? How do you read that dot?
Over or divided?
No. It's okay when you're dividing it, but when you're talking about ratio, you read that two dot as is to. For example, 1, instead of saying that is to 2. You understand? So that 2 dots called is to. Okay, so that's ratio. And then we have here profitability. So when we say profitability, which financial statements are we talking about? There are many types of financial statements, right? What are the 4 main types of financial statements? Huh? Okay, the one that you know, I think balance sheet, right? What is another name for balance sheet? Statement of financial position. Okay? And then we have income statement. What is another name for income statement?
Profit loss.
Statement of profit and loss. And the third one?
Cash flow.
Cat flow? Cat? In Vietnamese, you call it cat flow. Cash flow. Statement of cash flows. And the last one is the one that explains the balance sheet, the income statement, the cash flow, and there are explanation on how to calculate this and that. That is what we call, what is called that? It's like a statement of explanation. Okay? So, yeah, so like statement to the financial statement or explanation to the financial statement. So we have 4. Okay? So profitability, we are talking about income statement. Okay? How about liquidity? What do you mean by liquidity? Liquidity. What is liquidity? Is it? Huh? What is liquidity? This is just a review of what you learned, right, in your accounting. Liquidity.
So the ability to pay something.
Yes, very good. Yes. The ability to what?
To pay the debt.
Yes, your ability to pay your obligation, your debt. Okay? Your long-term obligations. Okay. Next, efficiency. What do you mean by efficiency? Huh? In accounting, how do we define efficiency in accounting?
Probably.
Efficiency. What is the difference between efficiency and effectiveness? In management, we always, encounter this word.
Do right and do the right things.
Aha! Wow. For example, you plan, right? You plan. You make your budget or you make your schedule. Okay? And you follow that schedule every day. You are efficient. But if you become a good person, okay? Or you achieve what you need to achieve and then you are effective. So, efficiency means the use of the resources. How well you use the resources. Okay? For example, inventory. How the company, how long or how many days, the company can sell the inventory. You understand? Or about maybe the current asset and the current liability. Okay? To make use. How about the capital structure? When they ask you, what are the capital structure of the company? How do you answer that? Last time we discussed about, what formula is that? Weighted, the WACC, what is that? Weighted average composes of two elements, right? What are the two main elements in the WACC? The debt and the equity. So, the capital structure, these are composed of the liabilities and the equity. So that is the capital structure of the company. Okay? And this one, interpret, after calculating the ratios, we need to explain. Okay? Is it favorable or unfavorable? Is it good or not good? Okay? Next, right here.
When the advantages and disadvantages of the during an organization being high or low, is that fixed and variable in past profit at different levels of activity. The terms explain the relevance of IAS 1 and IAS 2 and accounting standards in general.
8. 8. Okay, now, how about this word, gearing? What is in your mind? What is the mean by gearing?
Yes.
Yeah, we are talking about the long-term liabilities. Okay? The relationship of long-term liabilities to the capital or to the equity of the company, whether it's high or low. Okay? Next, explain costs that are fixed and variable. What do you mean by fixed? Costs that are fixed, it means they remain the same. Okay? And when you say variable, these are the costs that varies. Okay? That change. Give me an example of fixed costs. Rent. What else? Only rent? Depreciation. Okay? If you are using a straight line method. Okay? What else?
Internet, like monthly internet.
Yes. Insurance premium. Okay? How about variable costs? Electricity, Okay? Okay? Or salary of employee if they are per hour basis. Okay? And this one, we don't need to discuss this because it's more accounting. Okay, next. Right there.
Using Rachel without Rachel's financial statement are likely uninformative to not a very good. Rachel's enable financial statement to be interpreted if you compare like with like. Parties' interest in analysis include shareholders, lenders, customers, suppliers, employees, government agency, and companies.
Okay. You know what? Business and like you, without love, you are useless. Do you understand? Can you live without love? Huh? Can we live without love?
Yes.
Really? No, there are different level of love, right? Love of parents, okay, to you, love of your classmate, love of your friends, okay? So there are many types of love. Not the love that you are looking for. I'm sorry for that. Later we will give you all a hug, okay? For not having that kind of love. Okay, so it's useless. So in accounting, without ratios is also useless. Okay? What is that? What is the meaning of cash? 1,000. What do you mean by, account receivable? There's no meaning. So with this, we can give, okay, the business a meaning. Okay? Whether the business is soaring high or the business is going what? Bankrupt. Okay? Now, we can only what? Compare the company to the same industry. Do you understand? For example, Vina Milk. Can you compare Vina Milk to BUV, British University? No, because they are not the same. Do you understand? So we can only compare, okay, the same industry. So for Vienna Milk, we can compare with the TH Milk. Okay? BUB, British University, we can compare with which university? RMIT. Okay? So there are now parties involved. Now, tell me whether they are internal or external research. Shareholders. Internal or external? External. Lenders. External. Customers. External. Suppliers. Employees. Government. Okay? Competitors. Now, each one of them, you have to satisfy them. You understand? For example, employees. How can you satisfy the employees? Why do you think employees, okay, they are interested in the financial statement? Because sometimes if you're an employee, you are the what? Sometimes you are the breadwinner of the company. And the only money, okay, that you get is from your salary. And sometimes you offer your life to that company. So you need the information. Okay? Whether this company can give you what? Maybe a promotion, or maybe this company can give you bonus, you understand? Or whether this company can continue its operation for a long time. If not, if this employee is not happy, this employee will resign. Okay? Or find another job. How about government? They're interested to what? Tax. Yes. I agree. And competitors. Class, do you find competitors as your advantage or disadvantage? Disadvantage. Okay? Well, of course, they are your competitors, as we call competitors. You are competing with them. But somehow, you also need to know their strengths and weaknesses, so you know where you are. So these competitors, okay, you need to benchmark. Okay? They are your yardstick where you are. Are you the first, the second, or the third? Or you're the last? Okay? You are left behind. Okay, look at this formula. Return on capital employed. Can you please copy the formula? Just the formula. Okay? No need to copy everything, just the formula.
Oh, there's only already on the slide.
I already have. Oh, good. Okay, let's discuss. So, capital employed. You know what is capital employed? Capital employed is capital structure. So when I say capital structure, what are these? What is inside? Debt and long-term debt and